Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Wednesday, the first day of April 2015, and this is the daily report for gold and silver. It's not an April Fool's joke, but we do have the precious metals trading dramatically higher on the day. You're looking at a daily chart of gold to start this off today. You can see this large green candle representing today's activity, up over $21 on the day, 1204 with a low of 1180 and a high of 1208. Same type of upside move in silver, currently up about 33 cents, 16.97. So we are looking at silver just below $17 an ounce again. The high 1707, the low 1650. Wow, what a difference a day makes. Tremendous move to the upside in the precious metals markets on some weak economic data. Now, if you recall from yesterday's show, we talked about the fact that after seeing this market really rally on the type of rally that it had, 1220 on the high, 1141 on the low, so an $80 rally, we were going to get some sort of correction even if we were still in an impulse phase. But as the market came down, and yesterday, of course, we had this star-like candle, we really talked about two different models or two different scenarios that could potentially unfold, a bullish scenario and a bearish scenario, bull camp, bear camp, so to speak. And what we talked about with a bullish strategy would be that on today's candle, we would really complete what was known as a three-river morning star variation: the red candle, the star, and then the green candle. Now, for those of you who have been with me for some time, you realize that to take this call, you really need to have what's called a confirming candle on a daily chart. So you would have on the following day, if in fact we had follow through, higher high, higher low, this candle here would be our confirming candle, and that would actually trigger our buy signal. Now, the interesting thing though is that this particular buy signal, if it is triggered today, would have to, by the nature of any kind of a wave count, take out this most current high, and we talked about this yesterday, at about 1220. Now, the fact that we have closed up near the highs, and right now we are closing, as it appears, just right at this resistance area here, which is right around 1200. What we really want to see is whether or not we get the follow through, because we are going to run into some resistance in this particular zone, which is the difference between where the market is closing at. And let me kind of refresh the screen so we can look at this a little bit more clearly. But the zone that I'm looking at is really based on that top there up to the former top. And so this is the zone really that we would need to take out, because we obviously still have resistance right here. So if we do get that green candle as it begins to trade overseas and into the morning, that would trigger confirmation. This would be very strong. I don't expect it to go above this former high on tonight's trading or tomorrow's trading, but I really want to make sure that if we get the follow through, that it has enough momentum to carry us past this former high at about 1220 and to move to higher ground. And traders, this move today is really all buying based, or the majority of it is buying based. And you've got the dollar, it is a slightly weaker on the day, so it's adding about $2 in terms of value. Normal trading another $19, that's where we get our $21 plus day. And as I said yesterday, we plotted out what criteria we really needed to see to get this pivot point or key reversal candlestick signal that we look for. And so what we probably are seeing at this point is spike, correction, and now impulse. Now, in terms of the size of the move here, that's going to be a fairly easy calculation to plot. So we'll do some work on this through the end of the week. It's already Wednesday and into next week if we get follow through. But just to give you an idea of what kind of upside target we're going to look for if we get follow through and we trigger our buy signal, I've simply added a Fibonacci extension. And what I've done is I've calculated the range from the low here to the high here, this $80 range. I've then started an extension from the beginning of this new impulse wave, because if we get follow through, that's what this is going to be. And if this is some sort of a wave 3, and it doesn't really matter whether it's minor or major because the same rules apply, but what we calculate is we first have to say that wave 1 cannot be the smallest of any impulse wave. So doing that, if wave 1 and wave 3 are equal, you've got to move to about 1253. So we've got about a $53 move potential. However, in a more realistic manner, if we see wave 3 be 121% or 138%, 23%, excuse me, or 138%, we then get this zone here in which we could see the market move to. So we could see gold prices, if in fact we get follow through and we go into a nice rally here, we could see gold prices go anywhere between, call it 1253 and 1282. So traders, as far as silver goes, we would be issuing a buy recommendation in gold and a buy recommendation in silver. We have a similar scenario that we talked about this yesterday. We now have this Three River Morning Star. Now, under the same kind of a pretext, fib extension has gone in. We're looking at the rally. We're starting at the beginning of the third wave or the conclusion of the correction. Minimum move that you would look to see would take us to about 1850, and that's just saying that these two impulse waves would be equal. You would get, as I said, $18.50 silver. Then when we look right here, it kind of makes some sense because this is where, if in fact the market's going to run, where it's going to run also into resistance. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. We'll send out a trade alert if we do get a buy triggered. And really what we're looking at is to see if gold's going to be able to hold 1200. That's going to be one of the keys to me. Bye-bye.